This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks face continued pressure as interest rates rise and geopolitical risks mount. The S&P 500 fell to 0.4% between Friday, October 13th and Friday, October 20th. The index ended the week at its lowest level since June 1st, erasing all its gains since Congress raised the debt ceiling. 4/5 of its members lost value. Last week's bearish news was broad, touching on economics, geopolitics, and earnings. The economic news showed more strength in the United States. Retail sales beat estimates for the third straight month, and initial jobless claims fell to their lowest level since January. That argued against a slowdown and pushed borrowing costs to their highest in more than a decade. Mortgage rates hit levels last seen in 2000. There were two kinds of geopolitical risk. First is the potential for an Israeli invasion of Gaza, following Hamas terrorist attacks on October 7th. That's keeping investors worried about energy prices and a broader escalation. Second, trade relations with China worsened as Washington blocked the export of advanced semiconductor technology. Beijing responded with restrictions on materials needed for electric vehicle batteries. Quarterly results have also been unimpressive so far. Tesla missed estimates for earnings and revenue, while CEO Elon Musk gave cautious guidance about its coming Cybertruck. United Airlines also plunged to a new 52-week low on worries about higher fuel costs and travel disruptions related to turmoil in the Middle East. Last week was especially bearish for solar energy stocks, after SolarEdge Technologies pre-announced revenue about 20% below consensus. Management cited substantial unexpected cancellations in Europe. Moderna also fell on weak demand for coronavirus vaccines. Netflix, on the other hand, jumped after beating forecasts. The streaming video company boosted paid subscribers by cracking down on shared passwords. Aside from solar energy, Chinese stocks fell the most last week amid the geopolitical tensions. Airlines, semiconductors, and consumer discretionaries also lagged. Precious metals and energy outperformed as fear increased amid the global tensions. Consumer staples, a traditional safe haven, were the only other sector to advance. Now let's chart the market. Last week's price action gave potentially negative signs for the S&P 500. First, the index briefly pushed above its high on October 12th before turning lower. The resulting bearish outside week could suggest weakening of the longer-term trend. The S&P 500 has also made lower weekly lows and lower highs since the summer. Second is the shift in sector performance. Risk on groups like consumer discretionaries and semiconductors led for most of 2023, but they've underperformed in the last 2 weeks. Third, the S&P 500 closed below 4325. That was a peak from August of last year, where the index tried to build support over the summer. A return below that level could reflect a weaker uptrend. Traders could now see the 200-day moving average as another important level. Finally, CBO's Volatility Index, or VIX, ended last week at its highest level since late March. Further increases could be negative for sentiment. Now let's turn to this coming week. Earnings get more active, with about 1/3 of the S&P 500 issuing results. There are also some big economic reports. Cadence Design is the main company announcing numbers today. General Motors, Microsoft, and Coca-Cola are some of the big names tomorrow. Wednesday features new home sales and crude oil inventories. Meta Platforms, Boeing, and IBM are the most prominent companies issuing results. Thursday is the busiest session of the week. The Commerce Department announces gross domestic product for the last quarter. Initial jobless claims and durable goods orders are also due. Amazon.com, Intel, Ford Motor, and UPS report earnings. Friday brings the Personal Consumption Expenditures, or PCE, deflator, an inflation measure watched by the Federal Reserve. ExxonMobil and Chevron announce results. Thanks for watching. Please visit TradeStation.com for more.